Hi students, welcome to Telugu Vidyarthi channel. Here, as per Government Basic Learning Material, in admission of partner, they give 3 problems in 20 mark sums. The first one is Niharika and Varshika are partners sharing profits and losses in the ratio of 3:2 respectively. Their balance sheet as on 31st March 2021 as follows. Liabilities, assets. In liability side, sundry creditors, bills payable, general reserve, capitals, Niharika, Varshika. And asset side, cash, debtors, stock, furniture, buildings. So, on 1st April 2021, they decided to admit Miss Simra for 1 by 5th share in profits. The terms of admissions are Simra has to bring 20,000 towards capital and 10,000 towards goodwill in cash. Second point, furniture is to be depreciated by 10%. This is calculated on furniture 10,000 amount, 10,000 into 10 by 100. It will be reflected on revaluation account in debit side. Provide for bad debts at 5% on debtors. It will be calculated on debtors amount, that is 20,000, and posted in revaluation account debit side. Appreciate the value of building by 20%. So it will be calculated on buildings amount 25,000 into 20 by 100. So the points of B, C, D. 3 points are in revaluation account. Revaluation account formula is in debit side, assets decreased, liability increased, and bad debts. So, credit side, assets increased, liability decreased. So, this is the formula of revaluation account. So, prepare necessary ledger accounts and prepare balance sheet of new firm. So, this is the first problem in admission of partner. Then come to revaluation account. So, students, you follow debit side. Assets decreased. What assets? Furniture account 1000 and provision for bad debts 1000. Come to credit side. Buildings appreciated amount by 5000. So, credit side is highest amount, debit side 2000 lowest amount. The amount 5000 minus 2000. The answer, that is revaluation profit amount is 3000. So, it will be shared to two partners. Those are Niharika and Varshika. What is their ratio? 3:2. 3000 into 3 by 5 and Varshika 3000 into 2 by 5. Answers are 1800 and 1200 respectively. Then come to next account. Actually, we prepared general reserve, profit and loss, but here they did not give those accounts. Come to capitals account. 3 partners, Niharika, Varshika, Simra, both debit and credit. First of all, you have to write balances. By balance, old partners 20,000 and 15,000. The new partner, you have to write by cash as 20,000. Come to goodwill account, share it to both partners 6,000, 4,000. General reserve also 6,000, 4,000. Revaluation answer 1800 and 1200. So, credit side highest amount 33,800, 24,200, 20,000. So, it is the balance, by balance and to balance. Come to goodwill account. Goodwill brought in cash. Cash amount is 10,000. It will be shared to old partners Niharika and Varshika as per their ratio 6,000, 4,000. And come to cash account. Cash is a asset. Asset always show debit balance only. In old balance sheet, to balance 5,000. New partner bring 20,000 as cash. Simra capitals account 20,000 and also goodwill 10,000. The amount 35,000 is the answer by balance and to balance. Come to new balance sheet as of Niharika, Varshika and Simra as on 1st April 2021. Liabilities side, sundry creditors. There is no adjustment to this. So, it should be as it is. The amount 20,000. Bills payable also no adjustment. Amount 5,000. General reserve shared to old partners because it transferred to their accounts. Now capitals. New capitals. C. Capitals account Niharika 33,800, Varshika 24,200 and Simra 20,000. Come to asset side, cash, it will 35,000. Debtors 20,000 less 5% provision for bad debts 1,000, amount is 19,000. Stock also no adjustment. It should be write as it is 10,000. Furniture 10,000 minus depreciation 1,000, amount 9,000. Buildings 25,000 and 20% appreciation 30,000. Answer both sides 1,03,000. So students, you got 20 marks for this problem. Come to second problem. Naresh and Harish are partners sharing profits and losses in the ratio of 2:3. Their balance sheet as on 31st March 2020 was as follows. Liabilities, creditors 30,000, bills payable 10,000, general reserve 20,000, capitals Naresh 30,000 and Harish 20,000, cash 10,000, debtors 30,000, stock 15,000, furniture 20,000 and buildings 25,000. So, on 1st April 2020, they decided to admit Satish for 1/5 share in profits. He has to bring 30,000 towards capital and 20,000 towards goodwill in cash. B. Furniture is to be depreciated by 10%. Provide for bad debts at 5% on debtors. Appreciate the value of buildings by 20%. Prepare necessary ledger accounts and prepare balance sheet of new firm. Then come to third problem. Raghava and Shekhar are partners sharing profits and losses in the ratio of 3:2 respectively. Their balance sheet as on 31st March 2021 was as follows. Liabilities, creditors 15,000, outstanding expenses 20,000, general reserve 20,000, capitals Raghava 50,000, Shekhar 40,000. Bank 15,000, debtors 30,000, machinery 25,000, investment 35,000, land and building 40,000. On 1st April 2021, they decided to admit Mr. Sampath for 1/5 share in profits. The terms of admission are: Sampath has to bring 40,000 towards capital and 20,000 towards goodwill in cash. Second point, machinery is to be depreciated by 10%. Next point, provide for bad debts at 5% on debtors. Appreciate the value of buildings by 20%. Prepare necessary ledger accounts and prepare balance sheet of new firm. So students, these three problems are most important as per government basic learning materials. So students, subscribe my channel for more videos and share to your friends also. Thank you. Students, practice these problems. If you have any doubts, message to me